Hey guys, the the problem with um, small time investors, is we have more ideas and things than we have money for, and then the problem with the big money is their pool of areas they can invest in is so small because they have such a large amount of money that it would totally move the market. And then their stuff would no longer be cheap. But one area value investors have made a lot of money on is spinoffs. And this website, stockspinoffs.com, basically lists um, some of the spinoffs. And I have not, dove into these or anything yet, but um, this is upcoming spinoffs. Looks like IBM's going to spin off their managed infrastructure service unit. So there's like Pfizer's up here. Yeah, Merck. So these are well-known companies. Can search by different things, recent spin-offs. So this would be the parent company, and then this would be the spin-off company. I actually have this one right here. This one, I own this one in my Roth. Um, and I thought AIV was a spinoff, but maybe I was wrong. I thought AIV had spun off from the ticker O or something like that. That's what I thought, that AIV was a spinoff, but maybe I was mistaken on that one. But yeah, if you buy a lot of these spinoffs, when they first open, most of it is probably, if you buy it as soon as it starts, it's probably going to go down because most, like I said, most people will automatically sell the spinoffs. Why? Because they don't give a shit about them. They don't care that this company in 20 or 30 years might be worth a lot more, but all they care about is selling it today and making a little bit of money. Um, this one is interesting. And see, I didn't even know that this was a spinoff because I had almost bought that one a while back. But yeah, this is a spinoff. Dow Chemical Company. The Dow DuPont merger and Dow Chemical DuPont. New DuPont. But usually, the parent companies, these are successful businesses, these are successful companies, and then they spin off, a division or whatever of the parent company and basically create their own company out of their spinoff. And so some of these, is definitely worth a look at. And I don't think it goes back far enough, but oh, here it is right here. Abbott Laboratories spun off AbbVie, and AbbVie today is a great company. I mean, the market cap is $267 billion. I mean, the PE ratio is high, but they got a pretty good dividend. A lot of dividend investors would love a company like this, a company like AbbVie, who's got a pretty good dividend. They're earning money. The P's high, but look at the price. I mean, imagine if you had bought it $40 in 2013, and now it's a 150. I mean, that's 3 times your money, not including the 4% dividend. And actually, that 4% is up here. If you'd bought it down here, the dividend yield is probably 10% or more. Probably 12% if you bought down here. So 12%, and you're just buying more and more shares and more and more shares and more and more shares, and now I'm curious to see what the parent company is. 183 billion. So here you got AbbVie, who was a spinoff, who is actually higher market cap than the parent company was. So $267 billion for AbbVie, whereas Abbott Laboratories is $183 billion. And everyone hates these little penny stocks, but look, Abbott Laboratories was a penny stock, in '85. You can buy it for $1.62, and if you had sold up here at 126, I mean, good Lord, look at this is how you create wealth, guys. You buy these good companies down here. You wait 20 or 30 years, and next thing you know, your investment has 100x'd, and you're a wealthy person. And you didn't have to work for that money. You didn't have to pick up an extra shift. All you had to do was make a great investment and let 115,000 people work for you. You're part owner of this business. You're owner of this company, and you got 100,000 people going to work every day working for you. You're the owner of the company. This is your company. That they're working for you. They're making you money while you're taking a nap, sleeping. And while you're sleeping, they're going to work. And this just shows you the power of some of these spinoffs, where the spinoff company actually becomes bigger than the parent company was. Now, I've never even heard of this one, but I've definitely heard of GE. I've never heard of this company, but 20 billion market cap. If you bought it at $5, $4, and then I mean, this is where it spun off right here. This is when it became a company at $4 and some, and then now it's over $100 a share. I mean, to go from 5 to 20 would be 20 times your money. So 22 times your money. Meanwhile, you were getting a dividend probably most of the way as well. I mean, I when Buffett started, he started as a pure value investor, a big grant investor, where he's buying these cigar butt companies. The companies are in shitty industries, but they had one good puff left in them. Um, it's better to, I believe, own great companies, own great businesses, and own 1 or 2% of them, and just let them do the work. And I recently heard an interview with Seth Carlman, who's uh, one of the good true value investors, and he had that book. I think I've shown it before, but I got the book downloaded. But it was $1,000 a book when he sold it. But basically, he had an interview, and he said, "I'm still working on the cigar butts." So he's still buying cigar butts. So um, value investing. There's many different forms and many different strategies out there. You can buy something based on pure asset, pure net asset play, book value, PE. But a lot of the great businesses, you're not going to find them at 2 times earnings, 3 times earnings. You might have to buy a business at 15 or 20 times earnings, maybe even 30 times earnings, and if you bought Google or one of these great companies, you would have done really well. And just to show you, I think I've shown this before, but this is a little blogger site. I think this guy's out of the UK. And I can't invest in a lot of these businesses because these are UK businesses. But what I love about this guy is he takes looks at, like, this is um, isn't that the company we literally just looked at? No. Is it? No. Um, but this guy has done the research. He's already done the legwork for you. And just looking at something like this is something I would love, because basically this is years of bad news. Years of bad news, and nobody cares about this thing anymore. It's hated, it's ugly, everyone probably went dark, but he's already done the research. Um, I'm just reading this. I hadn't read this before. So this stock was over $200 in its heyday, and it's fallen from glory from $200 down to $1. So, the stock is trading at the, I don't know, it may have gone up since this guy posted, but let's say it's at $1.11. Instead of $1.11 right there. Um, you got 30 million in assets, you got 10 million in liabilities, you got 20. That leaves 20 million divided by the shares outstanding would be $1.88. So if the stock is trading at $1.11 and the cash is a dollar, or net asset value would be $1.88. This is value investing, guys. This is buying something that's less than for less than it's worth. All right, let me read a little more. Now we say it's $2 a share. I love his writing. The picture looks bleak, but the descent into the abyss appears to be coming to a halt. And this was a couple years ago, so it's interesting to see where it is today, to see what has happened. WSTL, let's look that one up. WSTL. Aha! Guess what? The guy made some money. So he had just said, he had bought it at under $1 and maybe a little bit above $1, but it's almost close to $2 now. They're still not earning any money though, so that's kind of deteriorating things. Um, wow, someone had just posted 16 hours ago that when you look at some of these pink sheet stocks, these over-the-counter stocks, I mean, the last comment might be years ago. Uh, According to Don, one day ago, shareholder equity is $2.62. So you can learn about a lot about stuff from these. And look, one guy's replying right now, even as we look at this thing. A lot of the commenters are dumb dumb. Some of them don't know what the hell they're talking about. A lot of them are trolls, but these guys sound like they're real investors. Um, they know what they're doing, and I can't remember where it is, but there was this guy showed his portfolio one time, and it was just it might have been like 100 of these little penny stock things, and this is just one guy, and these are all the tickers that he's wrote up and discussed and stuff. But look at all these other websites here. These are blogs, but these are where you get ideas from. And me personally, I basically mainly picked my own stocks and did my own research and my own whatever. But every once in a while, I'll look and read some of these things and jump on the bandwagon, so to speak. Um, this one I think is probably a UK company. I don't think I can see. A lot of these are stuff that I really can't. IOFNF. P ratio is 10. The EPS is 4 cent. 86 million market cap. What do they do? They produce iodine and halogen-based specialty chemical derivatives in the U.S. and the United Kingdom. Um, I love stuff like chemicals and stuff that actually like produce something. So this would be something I might be interested in as well. Um, but I just made a purchase today, so might have to wait for another day. Um, and he wrote this in May of 2022. So it was 30 cent back then, maybe. Um, But this is basically what you have to do, guys, to find these undervalued securities is take a deep look at them, and they say, all right, well, this building is valued on the balance sheet at 500,000. Well, you go to Google Earth or whatever and see how much that see what the current real estate value of that building is, and sometimes you can find stuff undervalued there. Um, but when you're looking at these obscure companies that nobody gives a shit about, that um, you just need more of them. Maybe you buy 100 of them. Maybe you buy 50 of them. And out of the 50, maybe 30 of them go bankrupt. Maybe 10 of them do nothing, and then the other 10, pop off or something. But yeah, I'm just skimming through these right now. I haven't really taken a deep dive. But see, when I'm talking about this guy digged up some valuation on the properties of the various county tax assessment sites. And see, anything that's public records, you can go and request from the city or county or whatever. And this is basically, the value that he has put on these properties and the value he's put on this facility. He doesn't know what this one is worth. He doesn't know what this one is worth, but he's piecing the puzzle together. And see, this right here is what I love to see, is where you have ownership percentage of class outstanding shares. This one guy right here, Melvin Smith, uh, owns 24, basically owns 25% of the company. Um, you don't really like to see that the CEO and the other big wigs only own like less than 1% of the company, but the estate of George Shaw owns 5%. Scott Shaw owns 8%. This is what I love to see right here, guys, where you got these basically these two families here that own 8, 9, 10, 11, 12, 13. Um, 40% of the company is owned by these people. They're never selling. So if you have a pizza pie and there's 100 shares of the pizza, and these two families own 40% of it, that means, guess what? There's only 60% of shares up for grabs, and those families that own 40%, they're never selling. They're trying to accumulate more shares. Like I said, go big or go home. The Finance experts will tell you, oh, you got to diversify. You got to diversify. That's why they're fucking broke because they don't know what the shit they're talking about. Yeah, you need a little diversification, and you need more diversification if you're going for these some of these small caps, in my opinion. But if you know what you're buying and you're 100% sure on it, go big. I mean, there's no problem going 50%, 60%, 80% in one stock or security. And these families, they're willing to put their family name out there, and they're willing to put, I don't know, 100% of their family wealth into these businesses. So obviously they believe in it, and maybe they're wrong, maybe they're right, but this is what I love to see, is seeing these people take a stance here. And this is a small cap, 4.5 million. Well, this was in January 2022, so it's kind of cool that we're fast forward in time. Um, but look, it went up 13% today. So this was written January 2022. Has 6 million in Q1 revenue. The Chinese economy is not growing. It is in decline. I'm sorry. And here's the website right here. But yeah, that sounds good. I mean, that sounds like good news. Um, but nobody cares about this stuff. Like look at the volume. I mean, the thing is trading at 16 cent. So I don't even know what that is. Let me see. Let's say you buy 10,000 shares at, let's say, 15 cent. It's $1,500. So there is literally, I mean, if you buy 10,000 shares, that's $1,500. So the average volume is basically $1,500 a day, which is nothing. um, so yeah, I mean, something like this, guy, like these little things like this. I mean, yeah, a lot of them probably going to go to zero. A lot of them probably going to go bankrupt. But if you can find a business that comes out of the dead and that um, I mean, look at this. I mean, it used to be $1.42 and then blah all the way down. Um, they're still losing 87 cents a share. That's not good. Um, 5 months ago, they had 20 million in revenues. I don't know how to play that. And my opinion is oil will go up at some point. So I love this guy's commentary. It is a minuscule company trading on the pink sheets. Its accounts are unaudited. All kinds of bad things can happen. Current management is trying to grow market share via mergers and acquisitions. This can be a risky move if not executed well. Maybe this energy cycle ends sooner rather than later. Maybe revenues stop growing and start to contract. Maybe EESE doesn't turn a profit and has to dilute to keep the lights on. Maybe the oil price keeps climbing, but E&Ps decide not to ramp up production. Blah, blah, blah. Time to wrap up. When the stock is left for dead, you only need a bit of good news to move it up. There's plenty that could go wrong here, but if one or two things go right, then the upside can be big. That's why I like to buy stock when it's sat down in the low range. I agree, David. I think you got some excellent um, commentary, some excellent, analysis. But this is what the average person can do. They can, a big hedge fund with, managing $20 billion is not going to take time to look at this company that's a $1.5 billion market cap. And I don't know if this Dean is maybe David, because didn't we see a Dean on the last one? Is Essie alive? But people have left this thing for dead long ago, and maybe it will die. But if you know, there's only $1,500 being traded hands every day on this. 10,000 shares is $1,500 if you're paying 15 cents. Um, I don't know. And it's up 13% today, so it actually was less than that. So it may not even have been 1,500, 10,000 or 1,500. Maybe you could have bought 1,000. This was probably one guy who bought something today. Maybe it was this guy. That's funny. I mean, he might be literally. I mean, he's. I mean, it sounds funny, but he literally might be the only person in the world that is buying this security, and uh, I don't know what his wealth is, but if I think he's done pretty well in the investing market, so he might be very wealthy by now. But yeah, that might just be him. He just might be buying the whole volume every day. He might just be buying. Hey, I'm just gonna put $1,500 every day in this thing and see what happens. And yeah, but these are true Ben Graham guys. These are true value investors. Um, you know, Undervalued Japan, value investing blog, nothing but net. What's a net? That's where they basically, let's say they have 30 million cash and the market cap is 20 million. So you can get a lot of great ideas from these guys, and I think if you had a piggybacked on some of these guys and have a portfolio of say 50 stocks or 50 of some of these ideas, you don't need to be right on everything. You just need to be right on one or two of them to do really well. So out of 50, if you get two that go up 10x, I mean you're pretty good. Maybe, or one that goes up 50x or something. um, Anyway, thanks for watching.